The jobs report just threw a wrench into the market's soft landing narrative. So, the November jobs report came in mixed. Yes, headline payrolls were a bit stronger than expected, but that number hides a sizable loss in October that wiped out September's big gain. Meanwhile, unemployment didn't slow down. It ticked down more than expected since September. In other words, jobs are weakening, making the rosier September report look like an outlier. We also got November retail sales. Retail spending was essentially flat, slightly below expectations for just a little growth. It's another data point, though, suggesting demand is slowing alongside the labor market. So, what does this mean for markets? Well, on one hand, investors are starting to question whether the Fed's pause on rate cuts may be premature. We're seeing odds rising for multiple cuts next year, and rates are dipping. On the other hand, a softer labor market takes some shine off the soft landing narrative that powered the recent rally. The economy may be slowing faster than markets hoped. That puts even more pressure on the next data point, Thursday's CPI report. If inflation stays contained, the Fed will have more room to stabilize the labor market. However, any sign of inflation reaccelerating puts the Fed in a tough spot, pitting job stabilization versus inflation control. And that's the real risk, stagflation. We'll have more after Thursday's CPI. Stay tuned.